You were listening to chartingwealth.com for Friday, the 10th of June, 2016. We continue to see up movement on our two-day candles, even though technically the overall market, as represented by IYY, was down 0.11%. So, what do we have actually going on? Well, we have a crossover that occurred back on the 1st of June. That was a crossover on our MACD, crossing over the red signal line on our charts. And we talk about these charts. Those you're listening on iTunes, listening to the audio, we appreciate you doing that, and we will do everything we can to explain to you what we're seeing on these charts. And I'm telling you, sometimes listening to an explanation is so much better than actually being confused by the visual. So listen intently. I'll do my best to explain it to you. If you would like to have the charts that we use, you can get those from us. All you need to do, go to chartingwealth.com, sign up for our daily email. We will send you the video of the program that I'm presenting to you right now in audio. There are people who are also watching it on video, but we will send you the layout so you have it on your own computer. How do you use the layout that we send to you? Well, you first go to freestockcharts.com, which we're in partnership with. They will give you a free account. You just go there, sign up. And then once you do that, you click the link we will send to you once you sign up for our daily newsletter, and that will then open up inside the charts that you've already set up at Free Stock Charts and give you our layout. It's very simple. It works like a charm. So if you'd like to follow along and have your own charts, I very much encourage you to do that because you need to see these things. You need to practice this stuff. Perfect practice makes perfect. That old saying, how do you get to Carnegie Hall? Practice. How do you get to super wealth? Practice. We're all about practicing, learning how to read these charts because, again, the charts are the key. You can have all the knowledge on valuation and everything else, but if you buy at the wrong time, when the whole market's going down, it's like the tide going out. You know, your boat's going to be in the mud when the tide goes out, regardless of how much navigational knowledge you have or regardless of how nice your boat is and how valuable. The old rotted out hulks will be in the mud too when the tide goes out. So you want to try to get out of the harbor when the tide comes in as the tide's rising. So just keep in mind reading the charts is really the key. That's what we teach. We don't give investment advice. We teach you how to read the charts. Once you learn how to read them, get good at it, you can make your own decisions. All right, you're big boys and girls. Now, so we see that the chart has moved over, going up on the 1st of June. Derivative oscillators continue to gain energy, and we've continued to see the MACD and the signal line diverge, that is, move apart from each other. We have nice green candlesticks that are open box with wicks on top. Just what we like to see with up movement. Now, if we look intraday on our 4-hour chart, what do we see? Well, we have seen a crossover, a pullback, which is what we were looking for. That's finally occurred. It occurred on the morning of the 9th. We have two spinning top red-filled boxes. Those are the type of candlesticks. Now, again, we use Hinkin-Ashi type candlesticks. This is not your typical candlestick. Ours are different than the regular candlesticks with an open, close, high, low. Ours are, they look the same, however, they are calculated differently. You want to know more about them? Go to Charting Wealth, listen to our training on Hinkin-Ashi candlesticks. You'll get a great deal out of it. So we have a crossover going down. That is the pullback we were looking for. We're going to see if that's going to be a permanent pullback, still above the 2-day trend line. When it rotates back over, that is a safe possibility to then get back into up moves. As some of you asked when all of this up movement started, these pullback areas we saw on our candlesticks were also potential areas to get in. The first of those, we saw the pullback on the 4-hour chart back on the 26th of May. We saw the charts take off again on the morning of the 27th. That's an entry point on the 27th. Also saw a pullback on the afternoon of the 31st and the morning of the 1st. And then in the afternoon of the 1st, we saw a green candlestick moving up again. That was a potential entry point. Same thing again, potential entry point on the 6th of June. So there are all sorts of ways to figure out how best and when to get into the market. Safe is to wait on the pullback. We've watched for that. That's just occurred. When that rotates back over again, sometimes it doesn't. Sometimes the down movement is so strong on the 4-hour chart, it will pull the 2-day chart over. Most of the time that does not happen. So again, we'll wait and see, but when it crosses back over on the MACD, that again is another potential entry point, typically the safest and the way we teach it the best, but we shall see. We shall see what we shall see. Remember, we don't make the charts do what we want them to do. We follow the charts. There are way too many people that try to forecast and make the charts do what they want them to do. That is a surefire way to lose all the money in your virtual account. That is a way to be a very poor investor, poor trader. Okay, so that is where we are on the IYY, the total market. Let's see how much the S&P 500 differs from that. Again, total market was down 0.11%, S&P 500, which SPY represents the movement on the Standard & Poor 500 big stocks. What happened on the S&P 500 today? It was down 0.17%. Again, the reason we have a green up candle is because we're looking at a 2-day candle. I'm explaining a 2-day candle for you. Had a bit of a pullback on the S&P 500, unlike the total market back on the 3rd of June, but we have had primarily green open box candles since the market turned over. Started moving up on the 24th. We had our crossover, that's the 24th of May, had our crossover on the 1st of June. Now, and we're still above our 2-day trend line. We have a decent trend line going at this point. Derivative oscillator is diverging, that is moving apart from the MACD, and I'm sorry, I said that exactly wrong. The MACD is moving away from the signal line diverging. The derivative oscillator is moving up in energy. On our charts, derivative oscillator are either red or green oscillators reflected on our lower indicators on our charts. Now, if we go to the half-day chart, what do we see? The 4-hour chart, big movement down in the morning for the S&P 500. And then a green spinning top in the afternoon, meaning lots of indecision. We did have a crossover going down. Again, that's where we are. The derivative oscillator's lost a lot of its energy, and we've technically crossed over going down again. This is the short chart looking for a pullback and an entry point. We've already had several entry points, several after the actual crossover on the 1st of June going up. We had one on the afternoon of the 2nd of June. We had another one on the afternoon of the 3rd of June. So again, watch for those. And again, what we encourage you to do, because we're not giving you trading advice, we're trying to teach and ask you to practice with a virtual account. And again, if you don't know what we're talking about or how all this works, sign up for our newsletter. We'll also send you a link to our How to Read a Stock Chart video, which will give you more information and help you understand what it is we're trying to get you to do, and that is open up an online trading account. That is a virtual trading account at any of the online brokerage firms. You got tons of them. You got Charles Schwab, you've got Options Express, you've got TD Ameritrade, you've got all sorts of people who have online brokerage firms that will set you up a free virtual account. You can become a virtual millionaire. Then you practice what we talk about till you get very, very good, and you develop your own trading, your own style. You take what we teach you, you modify it as to suit your time, energies, and proclivities. Then you start doing this on your own. We don't give you advice. Nobody pays us to do that for you, and we're not about to take that liability on. So where are we? We have the pullback underway on the S&P 500, and we're waiting for it to cross back over, going up if indeed it does. We can't force it. We can just wait for it to happen and jump on it when and if it does. Okay, back to the 2-day chart. The Qs. What is the Qs? Well, the Qs is the NASDAQ 100. That's the tech stocks, and it was down over the course of the day 0.17%, just like the S&P 500, but these candlesticks are a little different. The Qs actually has broken through the best 2-day trend line that we could possibly draw, and it's not a good one Goes to show you something. When you can't draw good trend lines, typically that trend is coming to an end. That's a good little rhyme. What do we have going on? Well, we have a spinning top as far as our 2-day candlestick goes. Lots of indecision. The total market for the Qs could be getting ready to roll over, going down. Hasn't yet, so we're not calling it yet, but we don't have a 2-day trend line anymore. We see the derivative oscillator losing some of its energy, and I guess you could say there's a little converging occurring between the MACD and the signal line, but not much at this point. So we don't have a call there. What do we have going on the 4-hour chart? Well, of course, it crossed over going down way back on the afternoon of the 3rd of June. Then it sort of popped up a little bit, and it's been mostly running sideways on us. And it crossed over in the morning, going down on the 2-day trend line, and was a little bit up in the afternoon. But again, like we said, the Qs lost 0.17% for the day. So again, be aware of what's going on. We do not have a trade yet. Now, if we had a good day over the course of Friday and the MACD crossed back over going up in the morning, you might find a way to get in the afternoon, because technically it's still up. But again, we don't have a good crossover, and it's been sliding along down for several days now, just losing energy, as you can tell by the both the MACD and the derivative oscillator that's been in the negative since it crossed over going down. That is where we are as far as the Qs goes. Now let's go back to our 2-day chart. And lastly, let's look at gold. Gold was up 0.56%. Still don't have a crossover on the 2-day chart. Derivative oscillators lost a lot of its energy. Gold has continued to move up. Big open box green candle with no bottom wick, just a top wick. Lots of strong up movement in gold. So gold is not yet, we don't yet call it up because we don't have a crossover on the MACD, and the derivative oscillator is still negative. It's the MACD that makes the call for us. But we do see that gold has continued to move up in the morning and the afternoon on Thursday the 9th. That is where we are. If indeed we see a crossover on gold and then a pullback in the 4-hour chart, we might find an entry point later. We don't have one to call right now. That is where we are. If you have been watching the videos lately and you have noticed that we have been broadcasting those videos instead of at our proprietary video site, we've been using YouTube for the last few days. We're doing that for a reason. We want to ask you to do something for us. When you call up that video, and this is for the people that subscribe to our email, not the folks that are listening on iTunes who are getting the audio. But if you're getting the video and you see that it's taking you to YouTube, would you subscribe to our YouTube channel? We are right at 500 now. If we can get up to 1,000, we can actually, YouTube will allow us to start doing proprietary broadcasts to you. We can do our own directly to you. You can go in, sign up for them, and receive them. Once we hit that 1,000 subscriber mark, that will help us out a great deal. So those of you who want to help us out, watch the video on on YouTube and subscribe. Watch it on YouTube and subscribe. That'll help us out a lot. For those of you listening on iTunes, continue to do that. We so appreciate it. If you want to help us out, please be so kind as to give us a 5-star rating and say something nice about us, and subscribe to our iTunes channel also. We have 2 of those, both the video of the weekly and the daily audio, which also includes the weekly in audio form. Thank you so much. We appreciate you. We love to hear from you. You got questions, problems, concerns, you need help, let us hear from you. We'll try to put a video together to assist you. We do appreciate you. We hope you appreciate us. A little reciprocity would be most appreciated when it comes to rating us, subscribing to both the iTunes and the YouTube channel. God bless you. Wish you the best in your trading and investing practice. From chartingwealth.com.